Oh. Well, oh. Welcome back, traders. So we're going to start this week's structure-based trading analysis out on the daily chart on the euro-dollar. All we're going to do is take a look at a few different important levels that have been tested multiple times and that the market could react to if the market gets there. As you can see, these levels are indicated among blue and red lines. The blue levels represent important levels of support where the market could see a bounce, and the red levels indicate important levels of resistance where the market could be pushed down from. As you can see here on this chart, we're actually at a level of support that has been tested as support here and as resistance here, and now this market broke above that level and has pulled back down into it. So with this being the case, my bias for the euro-dollar is going to be long. I'm only looking for long trades because we're right up against the previous level of resistance and support, major level of structure on this daily time frame. So let's zoom down and see how we can actually take advantage of this opportunity. Now that we know we're at an important level of structure that the market could be pushed up from, we can head down to a lower time frame in order to actually place a trade and see if we can find some type of entry reason. Now, for those of you who have been a part of the structure-based trading analysis since the beginning, then you'll know that for these specific videos, I use double bottoms and double tops. But for my personal trading, I have different entry reasons and strategies that I use at these key levels in order to get involved in the market. And if you'd like to learn more about those strategies, then there's a link in the description labeled EAP to a training program that I run from my website. And you are welcome to click that link and check out that program to see if it is right for you. But in this case, as I said, we're going to be looking for double tops and double bottoms at our key levels of structure. We are right around the blue level, which is a support level. I don't see any type of double bottom here on the 4-hour chart. So let's drop down another time frame. And here on the hourly, this head's closed too far down, but I do see that we could possibly get a double bottom here that would look something like this. So if this market puts in a double bottom at this level, then I will consider that as a good trading opportunity because we are at a daily level of structure, support, or resistance that can now become support. And also we're combining that analysis with an entry reason, which for me has proven to be a very accurate way to trade. So that's our analysis here on the euro-dollar for where the market is right now. If we zoom back out to the daily chart, you can see that we have another support level. If this market does not bounce off this support level and continues to fall, then we have a zone around the 1.076 area. And if this market does decide to push up from this level, then the spot where we'll be looking to take targets and possibly open a short position is around 1.096. And if it breaks through that level, we'll be looking at 1.106. And again, guys, those are zones, not necessarily that exact number or that exact line, but that area. All right, guys, so moving on to our next pair, we're going to take a look at the dollar Swiss. And as you can see on your screen, I'm actually already short on the dollar Swiss. We are up against the daily level of structure resistance. And this entry is actually based on one of those EAP strategies. And this trade was sent out to EAP members earlier today. That's something else I offer with the training program is that you receive 3 to 5 emails per week of trades that I plan to take and the analysis behind those trades in order to shorten your learning curve and guide you through the process of learning the strategies. And if any of you guys decide that you'd like to try out the EAP, I'm currently running a promotion that will be over at the end of this week for half off of your first month. And I'm also about to release a brand new strategy in that program that I've never taught anywhere before. But otherwise, we will continue our structure-based analysis here on the dollar Swiss. So as you can see, we're on the daily chart of the dollar Swiss, and we're looking at a few different key levels, one of which the market is at right now, which is this resistance level you see here. And we'll go ahead and drop down to some smaller time frames and see if we find any kind of double top or entry reason here. Obviously, I already found an entry reason, but we'll do this for the sake of this structure-based trading video. So here you see that there is no double tops on a 4-hour chart, but I bet if I go down to a 1-hour chart, there is a double top. And yes, there is. So in this case, this market has come up to the previous level of daily structure. Directly after hitting that daily level of structure, this market put in a nice double top, which considering the rules that we're using today and the rules that we're using for the structure-based trading video, that would have been our entry. And so far, this market would have not quite hit targets, but it did drop. But it has dropped a good bit from that daily level of structure. So as you can see, these major levels of structure do push the market around a good bit. And guys, it doesn't just have to be double tops and double bottoms to use for these entries. Of course, you can backtest your own entry reason, but you can also add filters to the double top and double bottom, such as having a double top with RSI divergence and a previous daily level of structure, or the break of a neckline and a pullback, like we see here. So here, in this case, we've already broke through the double top, We've already broke through the neckline, and now this market's pulling back. You could create a strategy that took advantage of this pullback in order to get a better entry on these structure-based trades. So that's what's happening right now on the dollar Swiss. Let's go ahead and zoom back out to the daily chart and talk a little bit about the levels we can be paying attention to if we break through some of these resistance and support levels. So our very next level, here on the dollar Swiss, if this market decides not to respect this level of resistance and push straight up, is another level of resistance around the 1.014 zone, which would be this resistance level right here. And if this market gets pushed down a good bit from here, we can be looking at the 0.9946 area. And if we break through that area, then the next level I'll be paying attention to is 0.9887. Again, guys, these are zones, not specific numbers, but those zones are the zones that I see as important and key levels of structure and that I'll be paying attention to for trading opportunities in the future. Next up, let's go ahead and go to the Aussie dollar. Here we are on the Aussie dollar daily chart. And as you can see, we're pushing down pretty close to a previous level of support now, if we haven't already got a entry reason. Because as I said earlier, guys, these are considered zones, and this would be considered in our zone. So let's go ahead and drop down to a 4-hour chart and check it out. On the 4-hour chart, we did get a double bottom, it looks like. So that would have been a valid entry based on the rules that we're using here today. Let's make sure that this was actually a double bottom. And it was. So in this case, using the rules that we've discussed, the entry would look something like this. The reason our entry is here is because if you take a look, this candle here is actually the one that touches the body of these candles, which is what I look for in a double bottom. The wick of the second bottom must at least touch the lowest bodies of the first bottom. Since we get that, then my entry, if I was trading using this specific set of rules, would have been the close of that candle. So that's why our entry is placed right in there, and we would be looking at stops right up under our first swing low here, and targets could go as far up as our next level of major structure, or we could get a little more conservative and take first targets off at a 1-to-1 risk reward and have second targets up here close to this level. So that's what the Aussie dollar is doing right now. And let's go ahead and zoom back out to the daily chart and check out what we might see if the Aussie dollar starts breaking through these major levels. So if this market, instead of pushing up from this level, decides to go ahead and crash down, and we break through the 0.7326 area, the next zone we'll be looking at is this important level of structure here, which has been tested multiple times in the past, and I really like this level, guys. If the market does come down here, then I will definitely be looking for some kind of bullish trading opportunity from that area, from the 0.7166 zone. And another possibility is that we see this market press up into the 0.746 area, and that's our level of resistance where we'll either be looking to take targets or open a short position. And our next zone is right above that at 0.750. Alright guys, so that's it for the Aussie dollar. Let's check out the dollar yen, then we'll end on the pound dollar directly after that. Alright guys, so here we are on the dollar yen. And as you can see here on the dollar yen, I'm going to go ahead and actually just delete these and start over because we've come into a new area here. So the first thing I see as resistance is this area here. The reason I see that as resistance is because this is a place the market has tested multiple times without being able to get above, at least as of late. So with that being the case, I would definitely consider that a major level of resistance. And when it comes to resistance, the next level that I'll point out as important is this highest level we see looking left. And now we have to talk about support. Where are the levels that we'll be looking for the market to be supported from? This level here is an obvious level. In my opinion, it sticks out like a sore thumb because we have 1, 2, and 3 different touches of that same zone. So if the market does decide to pull back into that area, that's where I'll be looking for some type of trading opportunity to the long side. And if the market continues to push up, of course, I'll be looking for my first shorting opportunities around the 115.10 level. And if we push above that level, I'll be looking for a shorting opportunity up here at these previous highs. Now for our second level of support, we can look down here at that area and also, of course, our lowest level here. Again, guys, if the market decides to push down, I'm looking for my first long there, second long opportunity there. And if we do break through both of those levels, then I'll also be looking for long opportunities at this very bottom level. So for support, we're looking at 111.99 zone and 110.57 zone. And if we break through both of those, our lowest zone is going to be around the 108 even handle. For resistance, we're looking at 115.10 and 118.14, or our highest highs over here looking left. Now we'll move on to our last pair, which is going to be the pound dollar. And here on the pound dollar, the open position you see is the trade that we talked about at the beginning of this video, that I made a video while entering yesterday, and also posted this trade on TradingView, as you could tell from the beginning of this video. So if you're interested in seeing the exact strategy I used in order to get involved in this trade, then just click the link in the description below this video, label pound dollar divergence. And as we have broke into a brand new area, I'm going to go ahead and delete all of my structure lines that we had from the last structure-based trading video, and we're going to plot on some new levels on the pound dollar. So as for support, we're going to be looking at this previous high here. Previous level the market has just broken above, and our next level of support would be that area where the market's tested multiple times. You can point those out for you right here and right here. Tested both of those times and was unable to break through it. So those are going to be our two major levels that I expect will support the market if the market gets down to those levels. And as for resistance, if we're looking up, color this red for resistance, you can see that we have a sore thumb area here, which is 2 touches, as support, which we could see become resistance at some point if the market does rise to these levels. And our second level of resistance is looking somewhere like right there. And of course, guys, another level that I was paying attention to is right in here where we have these 3 different areas where the market pushed down below, pushed back above, consolidated a bit in through here. But since the market's right here, I wanted to give you guys the other levels as well. So we'll pull that back up here. And we've already got a trade out, but if this market decides to continue pushing down, I'll be looking for those second targets around this level on this specific trade, and I'll also be looking for long opportunities if we get any there. If we do break through the 1.2729 level, I'll be looking for long opportunities around the 1.26 even handle. And if this market goes up from here, we're looking at the 1.3096 area for shorting opportunities. If we bust above that level, we'll be looking for these highs back here at around the 1.336 or the 1.34 even handle. So those are the key levels on these 5 major pairs that I'll be considering trading opportunities from. Hope you guys got some value out of this video.
Talk to you guys soon.
I would watch you stare.